Welcome back. Now, a big deal is brewing in the beer industry, and U.S. oil refiners are looking to West African suppliers once again. With more on that and the rest of the day's business headlines, we're joined by viewers Alexis Christoforous in New York. Alexis.
Thanks, Vince. It looks like the fourth time was a charm for Anheuser-Busch InBev. The brewer sweetened its takeover offer for rival SAB Miller to $104 billion, and the British South African company has agreed to the buyout in principle. The deal is expected to undergo intense scrutiny from antitrust reviews in both the U.S. and the European Union. The new company would be headquartered in Belgium. If the deal goes through, the combined company would be responsible for 1 out of every 3 beers sold worldwide. U.S. oil refineries are turning back to old suppliers in West Africa as the growth in shale production slows. The number of barrels of West African crude shipped to the U.S. is now at its highest level in about 2 years. That says strong refining margins and attractive prices have seen U.S. plants snap up cargoes. And new data shows that in addition to U.S. crude oil imports from Nigeria and Angola, the U.S. has recently taken more cargoes from smaller producers such as Cameroon and Gabon. Botswana is proposing bold economic stimulus after the price of diamonds dropped sharply. Diamonds account for about 75% of Botswana's foreign exchange earnings and 30% of GDP. But gem diamond demand has slowed because middlemen who buy rough stones have struggled with the stronger dollar and liquidity problems. The southern African country is expected to post a budget deficit this year and next. Botswana will use some of its $8.5 billion in foreign exchange reserves to stimulate the economy by targeting tourism, agricultural production, construction, and manufacturing. Vincent?
Now, Alexis, people across Africa are still excited about the announcement sometime back by Facebook that is going to launch this satellite that will provide free internet access to many across the region. What does this really mean, particularly for young entrepreneurs, startups across the continent?
Well, the Facebook Eutelsat deal is expected to provide employment and sustainable development in the information and communication technology sector for about 48 sub-Saharan African countries. In Nigeria, IT experts place the number of effective ISP companies at just 10 or less. ISP companies are responsible for providing, distributing, and regulating internet access to individuals and organizations. So the arrival of Facebook will likely bring a lot of attention to the poor output of the numerous ISP companies in the country, and it may also result in increased competition as those ISPs struggle to maintain their customer base in the face of a stronger competitor like Facebook. Vincent?
Alexis, thank you very much for your reporting.
Sure.
Alexis Christoforous, our business correspondent, coming to us live from New York.